Hey, good afternoon, everyone. Hope everyone had a great weekend and hope everyone is excited to get back to it. Here is wheat for today. Let's just jump right into it. Really not a whole lot of new news that came out over the weekend. Actually, basically nothing to speak of. And so today's volume really reflected a lack of any excitement over the 3-day weekend, right? I think traders are just kind of sitting back waiting for the action today and waiting to see what happens with the conditions report that come out later on today before they really establish much direction. And it's really unusual to really rally these markets during harvest, but I think that's what we're set up for. So here's wheat. You can notice the last 3 days we've had long upper shadow on today and Thursday, and then a reversal bar on Friday. Well, what we've got is this huge bullish divergence that has unfolded all the way from the high that came in early July, right? So what does a bullish divergence mean? It means that there's very little underlying strength behind this market. So on another screen over here, I have the commitment of traders report up, and I'll just tell it to you rather than show it. But from this move all the way during the month of August, okay, where we lost basically $1.20 of value, during that entire move, the funds went from net long 5,000 contracts of Kansas City wheat to net short 5,000 contracts. So they've taken 10,000 contracts off, but most of that move happened prior to August 22nd, okay, which is right here. So as of August 22nd, from here to here, they sold almost all of that. In fact, they sold 11,000 contracts, and then they bought some back through here. So that's what a divergence looks like, where you have lower price, but really no change in things like commitment of traders. The volume has been weaker. The momentum, the price differences have been weaker. So we're starting to see that take place, and it'll get really interesting when I show you corn here in just a second. But this is a doji bar right here where we opened even to where we closed, or where we closed even to where we opened. We were unable to close below the lows from the last 3 days. So I think it's significant. It's not really enough to call a top, but if we do find some strength above today's high tomorrow or the next day, then we should be able to mark a low here in Kansas City wheat and push something higher. And I think what's really taking place is I think we've really created a powder keg of energy below these lows back in here, especially with corn and wheat both being suppressed for really without any good fundamental reason. So let's take a look at corn. Corn off of this big low, off of this big move to the downside, we have this big divergence. But what's interesting is from a commitment of trader standpoint, remember we talked about this last week, how we have 1, 2, 3, 4 big reversal days with long upper shadows. And on those 4 days, they sold a massive amount of corn, but they failed to take the market anywhere. So to put it in perspective, from this day here all the way to this day right here. So now to be clear, this is the close of this day here was $4.99, and the close of this one was $4.79. So that's a 20-cent range. They sold over 130,000 contracts in that time period. And then just in these 5 days right here, they covered 25% of that position, or almost 30,000 contracts. So what does that tell you? Well, it tells you that they've gotten no return on their investment. And so how patient are fund managers? They're not at all. They are already covering that position because they recognize it's probably a loser based on the fact that our yield is getting smaller. And just read the reports all over Twitter. The moron that talked last week on News Talk Radio that yield didn't matter. I mean, it matters. If you take a look at our balance sheet and you cut it down to 167, which a lot of analysts are now looking at, you take our carry out to below 10%, all the way back down to 1.3. That's tighter than we were in the last 2 years. We're all the way back to that level, just with a yield cut of 7 bushel an acre. It doesn't make any sense whatsoever for this market to sell off if that's a risk. And you're seeing that here in price action. So why haven't we just popped right on up? Well, because I think probably because the commercials are sitting tight. But if if they decide that they want to get a little bit more neutral or reduce some of that short exposure that they've got, and the funds have to come out, then you're going to blow through these highs right here and pop. I don't know how high we pop. I think we at least close this gap. I really think we've got to go higher than that based on where the tightness is coming from. Because if you think that 1.13 is tight on corn, look at what beans are shaping up to potentially do. Soybeans, the USDA has us at 50.9. Well, some analysts are all the way down under 50, some as low as 47, 46. And if that happens, our bean yield is negative, which means we're way below pipeline, somewhere between here and call it 48.5, right? So you have less than a 2 bushel an acre adjustment to make here, and beans, we have to ration them. We're completely out. And even if you add 1.5 million acres of corn, still, or of beans, add 1.5 million to what we plan, to what the USDA says we have, and you have a yield of 49, and you cut demand, you're still only where they said we were at 237 million bushels. So the idea that our carryout's going to swell in beans and push it back down to the 10s or 11s, I think it's just nuts, because if it does do that, it's not going to do it until we get done with this harvest and the USDA, we're just swarming in supply. And we're going to see that in basis first. It's going to collapse, and it has not been. So I think sit tight. I think we've got to stay long these markets. In fact, if you have a shot of beans going negative, you have to stay long. There's no reason on earth that you would get short this market. And if you don't think that the yield matters between 51 and 47, then I don't even have words for how dumb I think you actually are if that's the case, because it does matter. It's everything in this equation, right? Because the tighter we get, the more demand we get. It actually spurs on way more demand than lower prices would, because the fear of running out or the fear of starvation is a risk that the other countries cannot take, so they will buy it. They don't have a choice. And there's not enough bushels in South America to tide it all the way over. You can't just cut the U.S. out and say, nope, you don't matter. That's nonsense. Okay, so basis-wise, as far as corn goes, everyone has been saying, oh, demand is just utter nonsense. It's terrible. Demand is horrible. Well, that's fine, but the basis is still historically high. In fact, we're only a few cents off of where we were a year ago with near all-time record basis levels. So basis is not weak. It's not reflective of demand that's non-existent. It's not reflective of a market that's healthy. It's not reflective of a market that is at full carry. Something is off here, and this divergence to me is telling us everything that we need to know. Dr. Alexander Elder is the person who taught us everything we know about divergences. And one of the things he talks about is the only thing more powerful than just a straight up divergence is actually a test back of a divergence back to the zero lines that fails to reach it before it turns higher. And that's exactly what you have right here. So we have a low, we have a big low, we have a new low. We now have a secondary test with higher readings on these oscillators right here, which means that the volume is absolutely switching and shifting underneath its feet. So I wouldn't be surprised to see corn explode higher. Beans, I think, have to go higher based on everything that we're looking at. And if you see this on beans, this is one of the reasons we're so bulled up beans. First of all, the correction from last Monday's high down to today's low is contained within parallel lines. Second, this move here from 11:30 all the way up to the peak in July at 14:35 unfolded in 5 waves. 1, 2, 3, 4, 5. Now you have an A, a B, and a C down into here. Okay, it's called an expanded flat, which means the buying pressure is so powerful underneath beans that the C wave was unable to take out the low of the of its A wave. Okay, so when you have that situation, what you end up with is a series of 1-2s, 1-2s, because the market is so bulled up. Because there's so much underlying pressure here of the risk of running out. This makes perfect sense if you're looking at it from a rationing standpoint. It does not make sense if you're looking at it from a, hey, Brazil's going to overwhelm us with supply. We don't need the U.S. beans. Yield doesn't matter in the U.S. Whatever. China hates us. Everybody hates us in the world, and they don't need to buy from us because they don't like us. They'd rather their people starve than buy from us. This doesn't make any sense if that's your worldview, because but neither does this trade action. This doesn't make any sense either. You think we would probably be down at 4 if yield doesn't matter, but it does. And the market is telling us it matters because we continue to find more and more strength with every day that passes. So here, let's go down the time frames. This is a daily chart. You've got a 1-2 up, you've got a 1-2, and now you've got another 1-2. I don't think you can count this as 5. If you can, that's fine too, because we're in a 2 if that's the case. So, okay, are you with me on that? This is either a series of 1-2s or this is a 5-wave sequence followed by a 3-wave down move. Both are very, very bullish coming off of this 5-wave move that happened back in here. So both of those counts are bullish. We held at the 38.2 retracement level. We're contained within parallel lines. We're consolidating right at the peak of our daily cloud. We're going to be back above where we were 26 days ago, barring some freak event where we do absolutely pummel this market overnight. But assuming that doesn't happen, we're going to be back out of the daily cloud, back on top of it, and ready to work higher. If I take our time frame down to 360 minutes, you've got this nice test of the cloud level here, and up we go into a wave 2. Remember, we talked about 1-2, 1-2, 1-2, right? So here's a wave 2 on the daily chart. Here's a wave 2 on the 360 minute. Here is your 240 minute with a wave 2. I don't like that we fell out of the 4-hour cloud, but that's not in and of itself terrible. It's just not, you would have rather have seen it get stronger. But you come on down to the 1-hour cloud, and we are completely reset here with a nice ABC pattern into a new bullish wave count with nice hook reversals and nice reversal action down here. So I think beans are ready to explode up and out of here. The good to excellent comes out here at 3 o'clock. We'll see what they do. I really don't think it matters that much because I think the USDA is going to be slow to post. But keep an eye on price action because soybeans are set to work themselves higher on these charts. So if you haven't rebought beans, you need to rebuy beans. I cannot say that loudly enough because of the way these counts are setting up. The pent-up energy here in corn. I mean, what are they going to do? Are they going to sell it down another 100,000 contracts and get it all the way down to 460? Like, that doesn't make any sense either. They just there's too much underlying and underpinning strength in these markets for them to break, for the bears to exert control. Same with wheat. It's just not there. So we're looking up in all 3 of these markets. I don't think that, and I think it's going to take quite a bit of damage before we're able to really change our mind on that. And certainly until the USDA comes in and says something like, hey, we have plenty of supply, yield on beans is 54, and we're going to, we have a 500 million bushel bean carryout. If they say that, then we're going lower. But if what we're reading is right, hearing is right, understanding is right, and what this technical action is telling us is right, then beans have to go higher, right? It's exactly what we always want to look for. Technical action that is consistent with what we understand the fundamentals to be. And the fundamentals, the supply side is getting tighter. The demand side is coming along out of fear of that. That's why you've seen purchases each of the last 6 days on beans, because fear drives buyers too, and they've been greedy for the last year, and now they're caught, and they don't really have a choice but to come in and buy. So so yeah, that's our view. And sorry if we were a little bit obstinate about the viewpoint of yield doesn't matter, but honestly, it's the dumbest thing I've ever read, and we read a lot. Anyway, that guy, I don't know who gave him a microphone, but all right, that's what we've got for you today. We'll see how we do overnight, and we'll be back with you on Wednesday. Hope you guys had a terrific weekend. Remember, there is risk trading futures and options, and you should only do so in light of your financial condition. Hope you guys have a great night. We'll talk to you later. Thanks. Bye.